Good morning, traders. Welcome to the Bookmap Platform Details webinar. This is Bruce at Bookmap. Risk disclaimer: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so what we do in this webinar here is introduce you to Bookmap. We define what it is, who uses it, how to connect it to the markets, and then how to get it, as well as then we jump into the interface so that you can understand what you're looking at in Bookmap and how to benefit from it. Okay, so we're looking at the live markets and start to analyze some of the basics in the order flow. Okay, after we define some of the elements on the chart, because it is unique data visualization compared to other platforms out there, and that is our advantage here. Now, after this webinar, there is another one at 11 a.m. Eastern, and that is for subscribers. So there's education that comes with Bookmap. There's a 4-part educational course that is always available online so that you can start to understand or integrate order flow within your trading. But we go through the same content in the advanced order flow webinars every day. So you can see what it looks like in the live market and start to apply it. And during that webinar that starts in about 28 minutes or so, we'll go through and very objectively analyze the market. And then due to our analysis, we'll start to anticipate where price might go. Seeing it in that live market as well as having the education is a pretty powerful package there. If you're serious about your order flow trading, then we do offer the education here for you. Okay, all right. Let's jump into the website here and just go through some of the components here on the website. So what is Bookmap? Let's describe it or define it. We're a software trading platform. Okay, we just have a very unique way of visualizing the market data. Right, who uses Bookmap? Day traders, scalpers, swing traders, quants, and also position traders. There's come across quite a few traders that maybe they're holding very long-term positions, but they still want to understand what the order flow looks like when they're making a decision. Okay, now basically we came from this quant environment and looking at the HFT environment, but you'll see here as I go through the demonstration how not only can it be used on much lower time frames like for scalping, but also for those higher time frames. Okay, because we visualize the order book historically, so you'll be able to use that on much higher time frames. Right, you can read more about getting the advantage here. Okay, but we're going to go through a lot of this during the webinar, and then connectivity. So we need to stop here and define the different markets that Bookmap connects to: futures markets, U.S. equities, and digital currencies. Now, since we're software, we don't provide the data. Okay, we're not a data provider, nor are we a broker. So the digital currencies data, it is actually free, so there's no worry there. But for U.S. equities, you will need to provide the data, and same for futures. So here's how you connect. So for U.S. equities, it's through DXFeed. That's the only method right now for connecting to the U.S. equities. For futures, you have a variety of different choices here. You can connect via Rhythmic, CQG, Gain Capital, Transact, IQ Feed, Nanotick, and Cedro, which is actually for the Brazilian markets. Now, I skipped over 3 different platforms that are listed here: Interactive Brokers, NinjaTrader, and TTX Trader Pro. You can also connect Bookmap via the API of these 3 platforms. So you have that option as well. However, it is recommended to connect directly to the data provider like Rhythmic or CQG. You just get cleaner data and you don't have to go through another platform. Okay? We are a platform, just like everyone else. We're not an indicator. We're not a derivative of time, price, or volume. Okay, some testimonials here, and then we'll get down here to the pricing and the different packages. Okay, So you can see that there's a few different packages here. You can subscribe yearly here, or you can subscribe monthly if you click on this link. And there's a couple different ones for the digital currencies, as you can see, and then a couple of different ones for the global, which means all of the markets that we connect to. Okay, so let's go through the digital free version over here. As you can see, it's a fully functioning copy of Bookmap. You can connect to the live market for one digital currency at a time, and that's it. Okay. Now you only get basic education and limited support, but if you want to check out and see what Bookmap looks like in live market, you always have that option available for the digital currency because they're always open, even over the weekend, and the data is free, so you can be up and running and connect no problem. Now, if you are interested in the live data for US equities or for futures, then I would recommend giving the global a try for a month and see if it works for you. Okay. The digital version here, it does have US equities delayed data feed, so you can look at that. You can also replay a file that has futures data. Okay, so you can still get a feel for what Bookmap is. It's just for the live market, you'll just have to try the global version though. Okay, now the digital plus version here is you subscribe to this one here. You can trade right from the Bookmap chart into GDAX or BitMEX account. Okay, you can record and replay your data. You get up to 20 instruments per exchange. And then you get the advanced education that I mentioned earlier, as well as the full support. Okay, now the big distinction here between these two versions and global. Global allows the connectivity to futures data and US equities, right? And that's really it. That's the big difference there. The Global Plus version, what you get here is, again, all of the markets, but you also get our add-on indicators here. One-click trading right from the Bookmap chart into live account. This is a fantastic advantage because you have the liquidity heat map in front of you. Therefore, you can front run high liquidity to try to get your fill, much higher probability, or hide your stops behind high liquidity and protect them. Then our proprietary indicators, like our large lot tracker, identifies larger players in the order book. Okay, individual actors that are holding the majority of the liquidity at price levels. We also have some imbalance indicators, and another indicator here that looks at larger players is our iceberg tracker. Okay, we can identify traders that are using iceberg orders. Okay, our algo can detect that. So again, they're larger players, but they don't want to show their liquidity. They don't want to scare the market away by showing excessive supply or demand, so they'll hide it with a hidden order or iceberg order, but we can detect them. We also have a correlation tracker adding different markets onto the Bookmap chart. And of course, you get the advanced education and full support. All right, scroll down a little bit more. Blog here, so you can access our blog, all sorts of interesting articles and interviews with traders. You can also go to our Twitter feed and at bookmap_pro, and all sorts of information here daily. So all sorts of interviews, for example, here with Ryan Mallory, as well as Futures Trader 71. So some great stuff here. Then our YouTube channel, all sorts of videos here. So I'll just go through the what you see here on the home page. Some intro videos if you're new, features and components, and then some selected webinars. But these order flow video snippets, I would recommend you watch these. I think you'll find them very helpful. They're very short, but they go through the order flow phenomena that Bookmap can uncover. This kind of is basically a pared down, simplified video that goes through the concepts that we go through in much more detail in the advanced order flow webinar. Okay, all right, well, let's jump into Bookmap and start to define some of the elements here. Just a second here. All right. Okay, we're looking at the NASDAQ and looking at the December contract here as we're having rollover this week, quadruple witching hour on Friday. So anyway, yeah, let's just take a look at this this contract here. And what are we looking at here in Bookmap? Okay, well, there's just, it looks like there's quite a bit of data here, and there is, and you might be quite confused if you're new, not understanding exactly what you're looking at and how to use it. But it's actually very simple and it's very straightforward. All of these pieces of data here are really very objective. And the most objective view I've seen of the marketplace. So let me explain. Three elements are on this chart. One is the historical and current best bid and offer. There's no aggregated data here like a candlestick. It's just the price going back and forth. And there's advantages to that I'll go over in just a minute. The other is the volume that trades on that historical best bid and offer. And then that's with the volume dots here that you see. And then the third element is the heat map. Okay, now the heat map, let's go through that first here, okay? Because that's the one that most traders have questions about and not quite understanding what they're looking at here. Okay, it's liquidity. It's where they're bidding and offering. We're showing you the complete auction here. Okay, so this vertical white line here, this separates the historical view with the current market view here. Okay, so this is the dashed lines here are your best bid and offer. Okay, this number here is your last traded volume. You see the price ladder here, and then you can see this COB column here. I'm just going to go through the COB column. It stands for current order book. Okay, and you can see these bars and numbers. This is liquidity. This is your dome. This is where traders are lined up here to offer. They want to be sellers at these specific price areas here. Other price levels down below current price, they're bidding. This is where they want to be buyers. Okay, so very quickly we can see a lot of buyers interested down here at 7,500 the figure. And that's pretty typical when you see very high liquidity around those big numbers. Okay, where are they on the offer? Well, the majority is up here at 75.08, so 8 points away. Anyway, what we do here is we take these numeric values, and they're always changing. You'll see that the auction is constantly changing. But when these values change, well, in a dome, it's refreshed with a new value, and you don't have any sort of history of what occurred. So what we do is we take these numeric values and then we create a heat map that represents these values. And then you can see it in this window here with the best bid and offer. So very high liquidity, you can see here, is red. And then orange is the next level, then yellow, then blue, or white, and then blue. The scale is up here if you want to understand high liquidity on down to black, which is the lowest amount of liquidity. Okay, so that's what you'll see. These numbers change. You'll see the heat map change. Okay? Now what we do though is we take that and we record it. We transpose it onto the chart historically. So look what happened up here at 08. See how it's they basically pulled liquidity, and they're adding down lower now. Okay? This person, and it's our large lot tracker showing like about 50%, maybe more, is one individual player is holding the majority here, and they're bullying the book right now. It's affecting price. Okay, so look what it did. Okay? They came in and they skewed the auction. They're showing heavy supply here. And then what was the reaction here? Well, we went sideways for a little bit, and then some sellers came in and hit the bid into the figure down here at 7,500. Okay? Now we have a complete view of really what occurred here. And we want to know if these traders here, did they have the intent to trade? Okay? And we can answer that by looking at this here. Okay, we can zoom in and look historically here. As price came down into this high liquidity here, these traders stayed in the book. Okay, so we had how many contracts here? 62 here on the bid, and 55 of them traded. Okay, so some was actually pulled, but the majority by far traded. So is this liquidity that is real? Absolutely. Okay, they wanted to trade, and they're long. Okay, now what about the levels below it here? See how they're pulling? See how it gets darker here? Okay, well these traders here at this price level had a lot less intention to trade. They started to pull it. There's still some here, but the majority of it pulled. Okay, and they did stay here at 7,500, pretty even here. So they stayed here until look what happened here. So they actually started to pull. Okay, as we zoom back out. Right. So now we're starting to understand the auction and the appetite here to trade, and we're starting to really kind of piece together the auction and how this can affect price. Okay. So this is very typical, in fact. Look how we came back up to 08 right here. Okay, this all occurred when this guy came into the book. Okay. This is kind of like a spoofing type of activity. For instance, did this trader take any risk to be able to do that? No, he just came in with high liquidity. Okay, now let's go over here and let's take a look. Oh, did he actually trade? And he did. The majority of this actually, well, we can take a look at 35 contracts traded. We had how many over here? 41. Okay, so you know, it's not really a spoof because he actually is short. He got filled. Okay, so you know, we're really starting to kind of understand now the auction and where price might go. Look at the longer term liquidity up here at 08. They came back in the book, right? And price came up into this area here, tested it, but shied away now. Okay, didn't quite get into, well, the best looks like the best offer did go into 08, but that was it. Okay, no transactions took place up here. Okay, we didn't find any buyers. They didn't take these guys on at 08. Okay, and in fact, what we're finding is right now we're finding more sellers, and we're through the figure right now. So we had some back and forth here, but we're starting to really understand, you know, who's in control or how this auction is starting to unfold. Okay, look at the sellers now. Okay, they're pulling, right? So down below the figure, no interest in trading here. Okay, at some point they will. Someone's going to scoop it up at a certain point and be interested, and we will note it. Okay, maybe here at between 90 and 91. See how they're coming into the book now? Okay, well, let's see if we go down here and if the aggressor here hits the bid into this high liquidity down here. All right. So anyway, that's just one element now we've gone through here. Okay, and we've already seen how it affects price. Now let's go over the other two elements on the Bookmap chart. Okay. The best bid and offer, and why this is an advantage. This is the simplest. In fact, let's just put on a candlestick chart here. Okay, a 5-minute candlestick chart. Right, and we'll look at this kind of bigger picture here. Each candle represents 5 minutes of data. Okay, open, high, low, and close. So you're actually only getting 4 data points per candle. It's very opaque what happened in between those 5 minutes. We really don't know looking at a candlestick chart. And it's quite a problem. We're closed off from understanding really what occurred here. So for example, asking some questions. Where did they trade? How much volume did they trade at some of these areas? You know, was it the aggressive seller or buyer? What about microstructural areas in here? And then how volume transacted within those structural areas? We have no clue by looking at the candlestick chart. However, if we can zoom in here, for example, in this little area here, okay, now we can see it all, right? The problem here with a candlestick is that it's aggregated data. Okay, it's aggregated during a 5-minute period. Okay, it just goes back and forth within this aggregate period here. And I don't care if it's volume bars or point and figure or range bars. It really doesn't matter. It's still aggregated data. Okay, and that's why there's an advantage here looking at just historical best bid and offer. Okay, we can start to understand microstructural areas here, areas of consolidation and breakouts and other patterns. Okay, here's an area of consolidation that broke. Okay, and they made another little consolidation here. Okay, it came up to the top of the bigger range here, as you can see, and the test was up here. Okay, it was actually another little range that broke, and we had a retest back up right up to it. Okay, this is actually one of the setups, not a very good example of it, but it's a retest back to where it broke from. Okay, and it failed here, so it came back down into the range. In fact, it made a new low. Okay, all of this happened within this 5-minute period. So we can just very easily see that now just by looking at historical best bid and offer. And now when we put the volume dots back on or on the best bid and offer, now we're starting to understand the aggressor. Okay, that's what we're showing here with the dots. And this is the volume we mostly, or it's what we consume as traders when we're looking at volume. We're always looking at the aggressor. What does that mean? It means the market buy and sell orders. Okay, they're taking liquidity off of the best bid or offer. Okay, if we zoom in here, here's this very, very simple chart that we're looking at. Best offer is the red line, best bid is the green line. Okay, and we can see the volume here and how it reacted in these areas here. This is a book sweep right here. Okay, there's not one seller in this little area here. So what happened? Well, the aggressor came in on the buy side. They took all the liquidity at one price level. So the best offer came up to another level here, and they took all of that as well. Okay, so the best offer goes up another tick, and then you see the buyers again, like only one contract here, okay, but it actually affected the best bid and offer, or it affected price. Now the offer went one more tick higher. Okay? So we're starting to understand these areas. This is how price moves, okay, or why price moves. It's due to the aggressor. And now, though, when we start to zoom out, we can get the big picture here of the aggressor and the microstructure, as well as the auction, okay, the heat map. That was the first element that we covered here. Okay, now we have the complete picture of really what's going on. Okay? And that's the data visualization here and advantage in Bookmap. Okay, so let's see here. What was our area? We're looking at 91 or so here. Okay, let's see. Let's zoom into this area here. Did they see how they were interested here? Well, did they trade? And absolutely. Look at the book sweep by the aggressor here, the seller, right into these areas of high liquidity. Okay, now we're starting to understand areas that maybe it'll start to be absorbed by the limit orders, okay, on the bid. Okay, not yet. I mean, price is still going through these areas here, and we're also seeing these guys at 89.25. They pull. Okay, so there's still high liquidity down here at 80, between around 88 or so, but you can see that a price kind of goes sideways for a bit, but the aggressor comes in again. Okay, but we're starting to understand you know, what's happening in some of these areas here. Another beautiful book sweep right into high liquidity. Right? Okay, so at this point here, and let's zoom out. Well, it does go a bit further down. Okay, okay. But you know, you can see the high liquidity here as the sellers trade into these areas here is starting to take away the that selling pressure. Okay, where are the sellers down in these little areas here? Okay, we don't see many contracts here. In fact, there's only 10. Looking at our volume, and what we're going to see here is look how right in this little cluster here, okay, and here, the aggressive buyer comes in. Okay, now we're showing appetite from the buy side. Okay, they've traded through into these areas of high liquidity here, and now there's not many sellers. In fact, now the buyers start to rotate in and start to scoop it up, and the movement to the upside occurred here. Okay, so overall, bigger picture though, we're still in a downtrend, but looking at some of these micro structural levels and what occurred in some of these areas here. Okay, right, until we get up to these areas here, and what we're seeing up here, okay, is 4 contracts that traded. So it starts to exhaust out from the buy side. They're just not interested in trading any further. Okay, so they don't take on these areas of higher liquidity up here. So the market kind of goes sideways for a bit, and the sellers come right back in. Okay, they're up at a level where they're willing to sell again, and they have appetite again to sell. Okay, and this little micro trend right here that you see, this is very indicative of what you see in a trend in the order flow. Let's take our candlestick off here, and here it is. Okay, clusters of sell volume at lower lows. Okay, look at the pullbacks in these little areas here. Okay, there's very few contracts, if any. Looks like none. Looks like none here, and really nothing here as well. Okay, so that's quite typical. It's you just don't find any buyers that are interested, so it exhausts out, and you find sellers instead that come in. And this is what it looks like. Okay, right down into a target here of high liquidity at 85. Okay, and it trades. As you can see, the transactions here. So anyway, we start to piece all of these together, and this is what we do in the advanced order flow webinar. Okay, and we do this in detail so that now we can start to understand where price might go. Okay, and we're still in a downtrend here, right? In fact, actually looking for sellers again at this little area right up here. Okay, this is where they broke from, and we're returning back to that little area again. Okay? And would anticipate there to be less buyers up here. Okay, but we'll see. Okay, actually, I'm starting to see some buyers up here. So maybe we'll break this line here at 92. Okay, but right now the sellers are starting to rotate right back in. Okay, but I'm very curious here at 91. If we can come back up here again and we find some buyers, I think we're going to break this 92 area here. Okay. Anyway, some things to look at, and we're going to continue on with the analysis here in the advanced order flow webinar. So if you guys are subscribers, we'll see you over there. Else, we'll catch up with you tomorrow at 10:30. Okay, have a good day.